please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Market's not running away. We are holding steady with about a 14-odd point gain. Ashwani Gujral is with us. Ashwani, thanks very much. What's your sense of things now? I mean, it's not breaking down, not running higher, but directionally, where are we headed?
Well, it's not doing as badly as one would have expected from 10,600, 620. Until now, the Nifty should have been down 80, 100 points. That 10,550 is getting sustained is actually a bullish sign. So my sense is that people who took shorts in the morning, etc., should be taking profits off. And from here, in case this today's high gets taken out, then you'll see some real strong short covering, because there's almost consensus that the market will not cross 10,600, 620 today's high, basically. Similarly on the banks, but we are hanging around at the higher end. So that just means that maybe even at these levels, the selling is not enough. And because FMCG, consumption, etc. is moving up, the market has a number of legs to stand on. So that way, we've now cut down shorts on the indices and are now long on Nifty Bank. Nifty broad stop is 10,550 should not get violated now. But from here, it looks like we could go up a little bit. Having said that, hotel stocks have done very well. So EIH, I believe, is still a buy because the move is just about starting out. That's a buy with a stop of 200, target of 221. HPCL is breaking down, and that's a sell with a stop of 327, target of 300. And PC Jeweler, Titan, all these guys, while it's Akshay Tritiya, but they're all coming off. So that is a sell with a stop of 310, target of 295.
Ashwani, any thoughts on Godrej Consumer? Big up move and on very good volumes today.
So it's all the same pack, consumption-related stocks. And I think once we get past 1120, you could see, maybe 1350 thereabouts. So anything consumption is now looking good.
Ashwani, Indigo, just a quick sense. It's not really going higher. I mean, it looked like it's going to get into the 1500, 1600 range, but it's not. I guess the market has also stopped moving. What your sense?
See, again, very similar to the market, Indigo hasn't come off substantially. It's moving sideways. So, anything that's correcting, not down, but sideways, is actually a positive. And at some point, it'll get past this 1500 and we'll have another large rally towards 1750, 1800.
And just one final question, long on the bank Nifty. Any NBFCs on your radar to go long today?
See, Diwan Housing, Bajaj Finance, all of these guys, see, once the market turns and it starts thinking about life beyond 10,600, I think financials will participate fairly strongly. And as we speak, Infosys is now, moving higher. So that way, the market is absorbing a lot of bad news and moving forward. Otherwise, from 10,600, standing where we are, won't have been possible.
Vedanta has won the bid to acquire Electrosteel Steels, making it the first of the 12 cases under IBC to get resolved. Now, Vedanta will be holding 90% of the equity shares of Electrosteel Steel, while the remaining 10% will be held by the existing shareholders and the financial creditors who will receive the share in exchange of the debt owed to them. Sandeep Parikh, the founder of FinSec Law Advisors, is here with us on the phone line. Mr. Parikh, would you find that a bit unusual? The expectation was that the new promoters will only bid enough to keep the banks happy and to pay the debtors. Why pay something extra for the equity shareholders, considering that they knew from the onset that equity investing is risky? So are you surprised that the existing shareholders are going to get 10%, and what would be the key reason for that, according to you?
So, typically what happens is equity gets wiped out as a matter of legal consequence. But the people who are entering as shareholders may want to kind of make it a popular move that they're coming in, they're not kind of taking away the entire equity. So it is kind of a move which is there to placate the existing shareholders who kind of lost all the money, to give them some kind of a bit of a sop. But I don't think this will set a legal benchmark or a precedent, though it may set some expectations in terms of what shareholders will expect in other companies. But again, as I said, don't expect it to come in as a routine matter in every case.
Though it has happened in Monnet, it has happened in Electro Steel. Now we don't know what will happen in Bhushan. But Mr. Parekh, so you said to sort of keep everyone on board, right, with the transaction. That's essentially the idea. The most important of that everybody would be the existing promoters. I mean, have them stay in some form so that they play along, because in a way, on the ground, you're going to need some cooperation from existing promoters once the new guy comes in. Would that be the right way to look at this?
So, I don't know the facts, but I doubt that would be the case. You know, when somebody is holding 90% of the shares, I really doubt the promoters, unless they can have a side agreement with the promoters and maybe pay them some kind of fee or something like that. I doubt that the promoters will be part of that 10% in the first place. And in any case, I really doubt if promoters will be really happy with a stake as low as that.
No, they are part of the, I mean, as we understand it, they are part of that 10%, Mr. Parekh. So, given, I mean, that as the fact of the case, would you accept that it could be to keep them with some skin in the game? So that once the asset gets taken over, I mean, there are no problems essentially in operating the asset.
No, so essentially, if they are part of this 10%, yes, so it's probably a sop to them as well. So if it's a combination of creditors, promoters, and general public, then obviously the general public is not getting much, I guess.
No, it's not getting very much. They're not getting very much.
Right. So I didn't know this fact. So given this fact, really, the promoters would get some kind of, so I think it would help in the transition, for sure. The creditors will get probably a fairly substantial stake as well, because they're probably writing off, they're doing a haircut and writing off some part of the loan. So what stays with the retail shareholders is unclear to me in terms of percentage, but it won't be much, it seems, from what you're telling me.
You know, retail shareholders can get stuck in this quite badly, Mr. Parekh. Do you believe there should be trading restrictions in these companies in order to protect them? SEBI's already released a discussion paper on that.
No, see, they are already. So these are companies which have died, right? Now there may be some odd case in which they might do reasonably well, but for the time being, they're kind of virtually dead, and you got a new person to come in to pump in a lot of money in the hope that there is revival and management things will turn around. So there's no legal right in shareholders to kind of get a profit out of a dead company, really. So whatever happens to them is kind of more by way of, in a way,
no, Mr. Parekh, what I meant is that once a company is admitted into IBC, do you think trading should be suspended in these companies on the stock exchanges so that, fresh retail shareholders don't get in and perhaps get stuck, given the volatility? So,
again, I have a minority view on this, but I don't think trading should be stopped, because if you stop trading, what happens is investors will not be able to exit at any price whatsoever. And yes, there will be volatility, but when it's a dead company or kind of near dead company, volatility is bound to be there, and this is kind of the nature of the market. Do you want to stop the exit for even those whatever 2 rupees or 10 rupees or 15 rupees, which is the remaining value of the company, to be stopped? So I'm not very convinced that trading should stop. I think it should stop for a very limited period of time when the bids are received, because then at that point of time, very substantial non-public information is there with a select handful of people. But broadly, I think trading should exist, should continue throughout the entire IBC process.
What about the 75% shareholding sort of norm for promoters staying under 75%? Would that be relaxed? Because as of now, with 90%, the new owners would need to, if the company remains listed, they'd need to get it under, basically sell 15% to get to 75, under 75. What's your sense? Because there was some talk that for these companies, the rule might be maybe deferred, etc.
Right. No, so see, SEBI has come out with a comment paper in which they've asked many of these questions, including the last question which you asked about trading. And second thing is what you just mentioned in terms of how they should handle. So they put it up for public comments whether minimum public shareholding should be relaxed, and if so, for how long. My own view really is that they should relax it for at least 5 years, because as I said, these are kind of near dead companies, and really they will take several years just to turn around and become profitable. After that, it will probably require a couple of years before shareholding is capable of being diluted at some reasonable price. So I would say give the company 5 years at least.
Markets up 21, 22 points, 10,570 is where we stand. The Bank Nifty is absolutely flat. So we're actually now approaching back to the day's highest, almost to the day's high at this stage. Anand Shah is Deputy CEO and Head of Investments, BNP Paribas Mutual Fund. He's now with us on the show. Anand, thanks very much. Good morning. Good to have you here. Your sense of things in terms of the market itself to begin with at this juncture. Are there factors enough to pull this and push this higher, or you think for now, from the lows, this rally is done?
Hi. No, frankly, market remains constructive, and after a stupendous, month-on-month gains which we saw through the 2017 and even in January, I think it was much overdue that market to take a breather, and that's what has happened. Nevertheless, if you see over the last 3-4 years also, if you see, there is a good amount of divergence. So while we keep on discussing markets, and that's what something is simplistic, but underlying there are many more factors, particularly earnings growth divergence between certain sectors versus other sectors, or within the sector certain companies versus other companies. So there's enough divergence and enough outperformers and underperformers within the market. So I think market's been very selectively doing very well and selectively doing very badly also through the last 3 years. Going forward, it will be very similar, where you'll have to identify sectors and within that companies which will continue to grow earnings, because market has very clearly rewarded earnings growth rate through the last 3 years. While we didn't have statistically earnings growth rate, we had enough and more earnings growth rate in the sub-segments of the market which have done very well.
Anand, before we drill it down to individual sectors, the redemptions in the month of March in mutual funds were very high. How were the first 15 days of April? Any sense of how the inflows are looking and redemptions?
I think overall, again, similar is what I'm saying regards market also. We have had continuous increase in inflows into the markets through the last year. I think one saving grace remains the SIP, even in the month of March. That systematic investment plans and systematic investing into equity markets continues to gain flavor. I think that's a very positive, but given the volatility which we saw in January and March, and given a very strong flows, some of them being a momentum flows having flown into the mutual funds, I think somebody would have taken a profit booking or sort of things. I won't read too much into what's happened in the month of March. We'll look for some more data in April and May before we can come to any conclusion on that. Coming to your question on April, I think April continues to, for us, continues to look good, and we see sustained both SIPs as well as lump sum investments into the mutual fund at this point of time.
Anand, this is something very topical, but I don't know if you've thought about this. This entire Vedanta Electrosteel deal, we have the finer details now. So existing shareholders would get 10%. of the equity, which is about 2,000 crores or so. What is your sense? What do you make of it? I mean, equity holders, the expectation was that would get written down completely. I mean, as they should, basically based on the line of payments that they stand at right at the bottom. But here they are getting, something is better than nothing, I guess. So it's a better outcome than what was earlier expected. Your thoughts on this and whether we are likely to see this in other cases as well? Of course, it doesn't mean anything if you're still holding the share, because it's very difficult to justify the electricity market cap based on what the value has been arrived at. Absolute disconnect there. But just theoretically, what is your sense?
Sure. I think let's take a little step back and think this is a huge step forward. I think bankruptcy, wherein the existing shareholders do pay the price for whatever, mismanagement or over-leverage or the cycles. I think that's a big step. But having said that, we were never of the belief that, you'll have a straightforward resolution plan which will get executed everywhere. It will be a trial and error. I think as we are seeing in some other cases also, it will go into the court. There will be new clarifications, there will be new amendments, and to that extent it will be like it happened in every other country. It's not going to be that we formulate a plan and it will follow to the T. I think it will evolve. I think we are moving in the right direction, and in each case we are finding different angles or different challenges from the existing law point of view. I think it will evolve. Coming to your question on electro steel, frankly, it's too early. I won't have all the details to really give any comment on that. But I'll reiterate that I think this is a great news for the Indian banking industry per se. And I'm sure this will get better by the day, and it will become much more clearer over maybe 2 years, maybe 3 years, depending on various, different cases having different complications.
Day, if you look at the index per se, so just up about 20 points in the Nifty. Focus will be on ACC and Mindtree as they report numbers later in the evening. On the mid-cap space, the activity is once again concentrated in the consumer names. So Godrej Consumer has now rallied close to about 4% Dabur is gaining about 2.5%. Mid-cap IT is having a great session with Hexaware at a fresh 52-week high, and KPIT Technology rallying close to about 2%. That apart, NBFCs like Ujjivan, Equitas, Diwan Housing also are on a firm footing.